Hi everyone, thank you for joining us for today's webinar. My name is Chloe Hayes from Investor Relations Consultancy Corporate Storytime. Today we're pleased to be joined by Lunnon Metals Managing Director Ed Ainscough. Lunnon Metals is exploring and developing the Kambalda Nickel Project in Western Australia, and this week announced a first-time mineral resource estimate for the Baker deposits. Today, Ed will run through a presentation describing the progression of the Kambalda Nickel Project in the last year since Lunnon's listing on the ASX. And at the end of this presentation, we'll have a Q&A session. So if you haven't already forwarded a question, you can do so by using the Q&A function at the bottom of your screen. And without any further ado, I'll hand over to Ed, who will provide a corporate overview. Thanks, Ed.
Thanks, Chloe. Thanks for organising this. I'll just share the screen. Right, so happy birthday to us. Today is the anniversary of our listing on the ASX, June the 16th, 2021. And look, this presentation, we put it out a couple of days ago on the ASX, and I spent a bit of time in Perth and on the web yesterday going through the presentation with shareholders, investors and brokers here in Perth. And it's both to update and give some colour on the Baker resource that we put out the other day, but also, I guess, to look back, take a deep breath, look back what we've done in 12 months, and especially the last 6 months. So if people saw me present last year, and if they've watched any of the videos I've done more recently, especially from January onwards, people would know that when we hit Baker, we were pretty excited. We were pretty aggressive. November, December, we drilled the thing out to 40 by 40 or better. And then the results started coming through in January, and January, February were dominated by the results. We knew we were onto something, so we really, we wanted to grab that momentum, keep that momentum going. We took a lot of confidence at Baker because we were drilling inside the WMC drill spacing, which is one of our frequent messages, that just because WMC didn't drill something doesn't mean it's not worth drilling. In fact, it's actually a vector for us to hone in on. So a lot of success at Baker in January and February, took that success and that confidence across to Warren. And then behind the scenes, I was busy working with our major shareholder, and we were very fortunate enough in April to announce the acquisition of the additional rights on the north side of Lake Lefroy in Kambalda, effectively doubling our footprint in what is a world-class district. Obviously, we also announced an addition to our resource base at the N75C of about 9,500 nickel tonnes. More success in May, and then it's all been capped off in June. As I said, happy birthday to us. We pushed really hard to get Baker done and reported before the anniversary of our listing, because that was an aspirational target. I've said many times, exploration is a process. Discovery is the outcome you're after. And the only way to measure discovery is actually by getting it into resource. So we pushed the guys, the site guys and the Perth guys, Aaron Worley and his team, really hard to get that done, and so I was really proud to get that out on Tuesday. It's a shame the market was so bad, but I can't control that. We can only control the things that we're working on. So a really busy year. We see it as a really successful year, and especially a really busy back end, the last 6 months. So I'll hopefully give you a bit of colour and some detail on how we see things shaping up. And in that green banner in the middle there, again, and I'll touch on this in a coming slide, the goal here is that these assets, the two we've already got and the two that we're acquiring, missed the last nickel boom. And they missed that last boom because they got sold with the gold to Goldfields back in 2001. So that's the reason, the only reason, these assets haven't seen any kind of modern, thorough exploration in the meantime, 20 to 30 years. So hopefully I'll take you through that, and we'll finish up with question and answer at the end. Now, I continue to show this slide in the presentations yesterday. It's always interesting, always generates a bit of conversation. I will explain it again because some people don't necessarily get it. So given that this is a live webinar, I take the opportunity to reach out and explain it. The chart shows two bubbles for each of the three companies that bought assets from WMC back in 2001. The smaller bubble is all the metal that have been mined by WMC at those assets at the time of sale. The larger bubble is all the metal that was mined in total. So the difference between those two bubbles is effectively the delta, is the nickel that WMC left on the table for those junior companies. They were more fleet of foot, they were more focused, they were better funded than this big, large company, WMC. And I can talk about WMC because I used to work for them at Kambalda, so I know what the culture was. And they were hugely successful. These companies took assets that WMC thought were tired. They locked in the nickel offtake. So WMC knew there was still nickel to come, but I don't think they had any idea that they would continue to produce. And so when you look at the reason for how much extra nickel's been found, it's twofold. One, the geology of these assets, and if you could see my arms waving around, you get a better impression. The geology is very long. These are big rivers of komatiite that deposited nickel. They're very long in their aspect ratio relative to a cross strike. That means that they're very long lived in that direction, but it also means it's very hard for WMC and then the other companies afterwards to actually drill them too much before they have to get underground. And even when they're underground, they're kind of up close to the actual ore body. So it's stretching away ahead of them. So very hard to define the deposit early on, but that means the deposit, and because of its geology, is very good at keeping on. It keeps giving extensional discoveries. So importantly, our 4 assets missed that last boom. There's no geological reason why the 4 nickel mines and the belts we're in shouldn't display the same characteristics. So we take great confidence from the endowment of Kambalda, 1.6 million tonnes in total. Our assets produced 250,000 tonnes of nickel metal, really serious assets back in the day when WMC was operating all the mines. And we take great confidence from Baker and what we're doing at Warren, that they're early signs that our assets are indeed delivering against that expectation. Just a quick snapshot, Chloe, of the corporate register. This has got 2 dates: the day we closed before the capital raise on the 12th of April. Very good share price at the time, $1.04. We had 39,000 nickel tonnes. We had the same amount of nickel in resource that we had at the IPO. And then on the 14th of June, when we put these slides out, I had to redo the slide like 10 times that day because the share price was falling so quickly. But obviously the share price has gone down, so the enterprise value has gone down, but our resource base has gone up considerably with the 2 additions we've made. So as a result, the enterprise value per pound, which is one way of measuring companies and their value, has dropped by a whole dollar, from $1.62 to 62 cents. Otherwise, the business is in great health. Just under $33 million on the back of that capital raise in April. I think on the back of that success at Baker and Warren, on the back of the success, we were able to do that deal with Goldfields and add a further organic growth potential to our portfolio. We've put our shareholders and investors and future investors, I think we put ourselves in pretty good shape for what looks like a pretty choppy couple of months, 2 to 6 months. Yesterday, the conversation around the various boardroom tables was just uncertainty about how long this will go on. So feel very comfortable, take great confidence that what we've achieved and pushed hard for in 6 to 12 months is actually put us in good stead for what could be a difficult period. Just keep in mind this 62 cent a pound figure, and I'll flip on to the next slide. And I put this together. This is very much kind of that, taking that deep breath. What have we achieved in 6 months and 12 months? So around the outside, the middle of the image is an isometric view of the famous nickel contact. That's the contact between the Kambalda footwall basalt, the Lunnon basalt, who the company's named after, and the hanging wall ultramafic. All the nickel that's ever been found in Kambalda is at or very close to that contact. So I've displayed around that fold nose, the Kui anticline, it's called, in black are the existing resources we had at the IPO, and in red were the 2 additions at 75C and at Baker. And then around the outside of the milestones that we're very proud of. We've now spent $12.5 million. That's every single dollar. That includes the broker fees, the legal fees. That's every single dollar in the business since we listed. We've drilled the entire IPO budget, 28,000 meters. We've done it in 1 year instead of 2 years. And we've been able to do that because Baker, it was a discovery. It was shallow. It was in a rock type that's very easy to drill. So it's enabled us to outperform what we told investors back in June last year. And in doing that, we've added 25,300 nickel tons. That's a 65% growth in the mineral resource, and it's come at a discovery cost, every single dollar, not just the dollars on the ground, every single dollar in the business at 22 cents a pound. So remember, it's costing around 20 cents a pound to find it. It's worth 60 to $1.60 a pound in our share price. And the intrinsic value of that metal in the ground at the current fabulous Australian nickel price is order of magnitude $20 a pound. So there's literally an order of magnitude step between what it's costing to discover, what it's worth in our share price, and what it's actually worth in the ground. So very proud of that, and make no bones about this. That success enabled us to do the deal with Goldfields. Goldfields have got a lot of nickel assets in and around their gold business. at Kambalda. They were happy to do a deal with us because of the success that we demonstrated. We kicked some goals, and that put us in a position to talk to them about that extra acquisition. And all of that helped us raise that $30 million. So pushing hard, being aggressive, leveraging off the success of Baker, I think has put us in a really good place on our first anniversary today, and hopefully puts everyone in a good place for the next 12 to 15 months. So a little bit of colour on Baker. On the left is the geological subdomains that we've modelled with our aggressive drill pattern at Baker. The different colours are just different shapes within the model that enable us to estimate the different portions of that ore body separately. I'll just highlight that these colours are the same colours on the next two slides. On the right are the categories, the indicated and the inferred categories, and you'll see they're a little bit smaller. We've been quite conservative, quite cautious down plunge. The ore body is open down plunge, but the geology didn't quite match in this deeper area, which were actually WMC's better holes. So we were cautious, we've taken that out, and that is the subject of drilling. That drilling's ongoing. There's 8,000 meters of RC and 3,000 meters of diamond that's being drilled at Baker as we speak. So we are very confident we'll grow that indicated resource. This red tongue will push off to the southeast, and that will push the inferred resource out ahead of it. So it's a first resource, but it's not necessarily the last resource. We will definitely look to update this later in the year, and the drill results from that drill campaign should start coming through at the end of June and go right through July and into August. And when we finish that, we'll sit down and we'll probably update the mineral resource statement at the end of Q3 or early Q4. Just for reference, that open pit we often mention as a possible access site for underground is just on the edge of this image. It's 300 meters from the top of the ore body. As the crow flies, we'll probably come off the side of that pit, so it'll be slightly longer to decline across underground. But otherwise, the capital is very modest. So it's shallow, it's high grade, and it's close to existing infrastructure, and it's on granted ends. So it really literally could not be in a better place for a small junior like ourselves coming out of IPO. So I mentioned the colours were the same. So referencing back after the webinar, people should be able to relate the plan through to the isometric view. This is the main channel. The yellow drill holes are WMC's old holes, and the grey holes are all the holes we've drilled. So you can see we've drilled a lot more holes in WMC, and they really literally were so unlucky. These are actually two of their best holes. This hole's a bit dead, and they could not have missed this any more inconveniently than they did. If they put their holes in a different space and hit what we'd hit, this was back in the early 1970s, they drilled this. I'm pretty sure they would have drilled it out and they would have exploited it. So we're very lucky that it's still there. And in cross section, you can see the same colors. Importantly, and just a little bit of I guess a lead for the future, there's a structure that comes through. We said that very early in the piece that we thought there were faults that were thickening the nickel. That is the case. This fault is mineralized. A couple of diamond holes went through this, narrow but very high grade, 2 meters at 10 or so %. That is picking up nickel from somewhere down here on the contact, smearing it up that structure, and then thickening it where it goes through the hanging wall. So we're now trying to find those pods of nickel on that contact. That is the more typically prospective contact. And if we can find any nickel there, it will dramatically influence where we position the decline in the future. So we're moving from just drilling this thing out geologically and starting to think about, well, where do we need to put our drill holes for the potential planning of this when we exploit it in the future. So that's Baker. Swinging back around that fold nose I showed you on the earlier plan, we're now looking down from the southwest at the Foster mine. The messaging here is that we're pushing ahead with the permitting. We're pushing ahead with the historical drill core program that added the N75C. And we're pushing ahead with the permitting so that we can get the dewatering going. This mine is flooded to surface. There's about 1.5 gig of water. And on the right is some imagery from when my time at St Ives, still in the early 2000s, we dewatered a very similar project just to the north of Foster, a place called Conqueror. So this is what the pumps will look like. They'll go down this shaft, Foster shaft, which is on the isometric here. And we've got a permitted discharge point that we permitted when we were a private company in joint venture with Goldfields. So we're now busy trying to lift those permits out of the joint venture's name and put them in our name because we own the tenements. The other key message here is the endowment imbalance between Foster, which produced 60,000 nickel tons, and we've still got 42,000 tons left to go, and Warren. There's a 1.5 kilometre gap between Warren and Foster. It's a separate channel. It's not part of the Foster system, and we've only got 6,500 nickel tonnes at Warren. That imbalance just geologically doesn't make any sense, which is why we're very confident and very aggressive with our drilling at Warren, and with the Warren 3 and the Warren 1 downhole EM programs and parent and wedge holes. We're having great success infilling again between WMC holes that had nothing in. We're coming inside, and I think at Warren, typically some of the middle of the plate, it's 8 to 9 metres, 2.5 to 3.5%. We will update Warren when we finish that deep program. That will be back towards the back of the calendar year. So there'll be an update on Warren and there'll be an update on Baker between now and Christmas. And then we'll start turning our minds to the mine planning and scheduling of that material. So that's Foster and the dewatering, the re-entry view, plus Warren. And then just diagrammatically, I've said this many times, the thing about Baker that really excites us is it opened our eyes. Up until we found Baker, we thought everything we were doing towards production had to be at Foster. We had to dewater Foster, we had to re-enter Foster, we had to drill Foster. Now that we found Baker, it's given us great confidence that we can do things in parallel to Foster. There could be other Bakers out there, and we're already looking for analogues on our tenement package for what we found at Baker in and around the old WMC holes. But the goals for Foster, Warren and Baker are to get the resource models done. They form the first step in any of the regulatory approvals we need to get. We're on granted M's, so we actually really only need a mining proposal, a mine closure plan, and a project management plan to submit to the department here. But to do that, we obviously need to know what the tonnes and the grade and the plans are for the mine. So really, the Baker resource is a line in the sand, and the rest of this year we'll be shifting our minds to more of that kind of conceptual thinking about what is the capacity of those three assets, Foster, Warren and Baker. And obviously the goal ultimately is to get our heads around moving from being a pure explorer to a company that's in a position to consider development and production. Quick update on the acquisition we announced in April. We're acquiring the rights, the nickel rights, not the tenements, to this shape on this image. So we're on the north side of Lake Lefroy. We're in and around the famous Kambalda Dome. All the other nickel assets to our north sit within the Mincor stable. We're picking up two historical mines, Fisher and Silver Lake. Between them, they mined 160,000 nickel tonnes historically before they were shut. Again, they were shut at the time WMC sold its gold business to Goldfields. And the area we're really excited about sits south of Mincor's now Independence. Sorry, it used to be Independence, now owned by Mincor, the Long Victor mine, and especially their Maclay Moran discovery. That was about 70,000 nickel tonnes at 4.7. We think those channels run straight onto our ground. There's an area, 2 square kilometres between the south end of Mincor and our new ground, which has got absolutely no drilling. Not just no recent drilling, it's got no drilling at all. So we're pretty excited about that opportunity. We had to submit it to FIRB because Goldfields is our major shareholder. So we need approval from FIRB, but there's no policy issue. We're actually taking assets already owned by Goldfields and putting them in an Australian public company hands. That's just time, government department. Hope to get that by the end of the month. Because Goldfields is our shareholder, they're a related party. So we've got to go through an independent experts report and BDO corporate finance. Well progressed with that. That will be finished in due course. They were waiting for the Baker resource number to come out so that their report wouldn't be dated before it was published. So they'll wrap that up now. And then once it's done and once we've got FIRB, we'll issue the notice of meeting to shareholders. And we would hope shareholders will be excited, as excited about that deal as we are. So hopefully July, August, we should be wrapping that up and getting boots on ground. And as I said, the first place we'll be looking is along strike from Maclay Moran and down dip of Silver Lake. And of course, in and around that time when we were halted for those couple of days, very fortunate in hindsight now to raise $30 million, which I think keeps us immune to the sentiment and the negativity we're seeing in the market currently with the concerns about inflation and stagflation. We're very happy that we've got all of this done and we pushed hard in those first 6 months. So exciting times for us and hopefully for our shareholders. So just to wrap up, we're looking at two perspective views down, obviously down towards the north, our existing project in the foreground of that image with Foster, Baker, Warren, and then in the new project yet to settle at Fisher and Silver Lake. So we're about 25 kilometres from the Nickel West concentrator at Kambalda. That's where all the ore historically from all of our mines went. And for 27 years, our 4 mines were a substantial baseload to that plant. So metallurgically, we're very confident there shouldn't be any issue at all with either the existing mines or the new ones we find. It's all the same geology. We are allowed, Nickel West have an offtake preemption on our ore. They are the logical partner because of their proximity, but we are allowed to talk to anyone else. But before we settle commercially with anyone else, we have to go back to Nickel West and give them the opportunity to preempt or better those terms. So we're in a pretty good position. As David Southam, who's doing a fantastic job at Mincor, says, we're a capital light proposition. There's no capital required to build a plant. So very different to that kind of gold junior moving from the explorer space to the producer space, where you typically have to raise money and build a plant and all the risk that goes with building a plant. We don't have any of that risk or capital. So really it is very much now, Chloe, about head down, push on. We've developed a great deal of momentum with the Baker discovery and our success at Warren, and with the fundraising in April. I think we're pretty well placed to discover, grow and develop, as I said at the bottom. So that's the end of my summary. I showed the picture on the left all the time. It used to be on somebody else's tenements. So that is Jack Lunnon on the right, who drilled the very first discovery hole in Kambalda. That is now on our new mineral rights area. So I'm pleased to say we've managed to get our foot on that. But we like to think we're making our own history now. It's not all about the past, it's about the future. And there's Graham Baker from Blue Spec Drilling, who is almost intolerable now that we've named a deposit after him. He's so proud. You can see that picture. He's as proud as punch, and he's also stopping all the other drillers from drilling any of the other targets because he doesn't want anyone else to have a project named after them. So exciting times. Happy to take questions, and I'll just stop my screen share so that we can move to the Q&A session.
Perfect. Thanks, Ed, for the comprehensive overview. The first question we have today is, will the company be undertaking a historical drill ore program for Fisher and Silver Lake? And is the company still reviewing the historical drill cores for Warren, Foster and Jan, or have the company stopped with the latter?
Right, no, I'll answer the end bit first. No, the historical core program is an important program for us. It's a differentiator for us because it allows us to grow the resource independent of the drill bit. So there's 350 kilometres of core at the Kambalda core yard from Foster and Jan. There's about 260 kilometres of core that relates to the new mineral rights area up at Fisher Silver Lake. So we actually have got a lot of core that we'd already cut when we were private to do with our existing project. So we can actually get on with that, and we are in parallel. I won't lie, obviously Baker has sucked in a lot of our time and our effort. So we have put that slightly on the back burner, but now that Baker's out of the way, we will be putting some of the guys at site onto that historical core program at Foster Jan, and it will be a big part of, I think we allocated $10 million from the 30 we raised to the 2 new assets at Fisher Silver Lake, and a big portion of that is going to cutting historical core. There are some obvious walk-up targets, especially at Silver Lake, where we think we can add very quick resource tons to that asset. But also not just resource tons, but they'll actually lead to extensional targets that we can then drill as well. So it's kind of it's a doubling up. We get the benefit of the old core and we can put things quickly into resource, but that then leads us into drill targets. So yes, big part, still doing it, and will be a big part of the new assets as well.
Okay. Does the company have more Jan shallow targets, or will the company be focusing on Jan deeps?
There's not a huge number of targets up near surface at Jan Shaft. WMC found Jan Shaft by drilling RC and percussion drilling in and around the exposure and the outcrop of that. So there's not a huge number of shallow targets, and by shallow I mean down to kind of 100, 200 metres. The focus at Jan will be to move the historical core program there when Foster is exhausted from that perspective, and also to drill some, I won't say deep diamond holes, because Jan shut at 550, 560 metres, which back in the 80s was quite deep, considered quite deep. It's actually not that deep. So there are flanks around the side of the Jan stock, as we call it, that actually are quite shallow and not tested. So it will definitely be more diamond than RC. Yeah, to answer the question, no, there's not too many shallow targets, but it's a very prospective piece of nickel country.
Are there any drill holes which close off Baker mineralization down plunge and along strike? And what is the true width of Baker mineralization?
The Baker mineralization is pretty well closed off to the southwest by the drilling we've done. It's closed off up plunge by the fact that it goes up into the oxide transition boundary. So we wouldn't chase it up there for metallurgical reasons, although it's still there. It's open to the northeast, and we're busy drilling that now. And it's most definitely open down plunge along that red tongue that I showed on the geology domains on one of the earlier slides. In terms of width, it does pinch and swell. And I think straight out of the bat, when we first announced Baker, we said it can be quite thin, but it can be quite thick too. On average, it's probably between 2 and 4 meters. It's in table 1 from Tuesday's release. Just off the top of my head, I can't remember exactly what we said there, but I'd say it's between 2 and 4 meters on average in the main. But then we've got some drill holes where it got up to 10 to 12 meters thick, where that structure thickened and doubled up the ore body. So yeah, it's going to be a fascinating thing to open up and have a look in real time once we get underground in the future.
The next question we have here is, are there any other opportunities for Lunnon and Goldfields to transact on nickel assets?
Yeah, interesting question. Now, obviously, we've got the existing project on the south side of the lake. The new mineral rights that we've acquired sit on the north side of the lake. And you don't have to be a rocket scientist to work out that the geology from a nickel perspective obviously carries on underneath. That said, St Ives Gold, the operation for Goldfields, is a really important part of their gold portfolio. So the fact that we've been able to, in the first place, acquire Foster Jan in 100% is a huge tick. On the north side of the lake, they've got some interest that they wanted to keep the tenements. So we've got the mineral right, the nickel rights there, not the tenements. So our relationship with Goldfields is one where they're both our shareholder, but we don't take them for granted. How we interact with Goldfields at site is more about what we've currently got rather than thinking about what we might have in the future. So yes, there is other nickel potential in Goldfields' portfolio in Kambalda, but I think for the moment we really need to continue to kick some goals with what we've already got before letting our eyes get too big, shall we say.
Mincor's northern operations border on Lunnon's newly acquired ground featuring Silver Lake and Fisher Mines. How do you see Mincor as an analogue for what Lunnon hopes to achieve?
Well, look, I said it again. David Southam's done a great job with Mincor, and a few years ago, I don't know, put words in his mouth, but he took a build it and they will come approach. And in hindsight, his timing's been fantastic. He's really hit the nickel price at an amazing time. They've obviously, Mincor's got slightly more assets and a larger resource portfolio, I think around 200,000 nickel tons. So we kind of present as Mincor was a few years ago. I won't say a mini Mincor, maybe a mid-sized Mincor. And really now it's a question of time and money. To do what David and Mincor have done is about accelerating the effort. It's about taking our discoveries and our resources and doing that conceptual mine planning, putting things in reserve, dealing with Nickel West, and then putting ourselves as quickly as possible, I guess, to catch up with Mincor. So yeah, they're a perfect analog, and because they've been so successful, and they've not only shown the geological prospectivity of ground in the Kambalda region, I think they've shown the real benefit of that relationship with Nickel West and having that capital light approach. The ability to turn assets to account in Kambalda on the granted M's is fantastic. It's unparalleled. So yeah, we applaud David, and we would love to emulate him.
This question has just come in. How does your EV per pound of nickel in resource compare to Mincor's?
Well, it's a lot less. It's a lot less this week than it was last week as well. And as I said, there's not much I can do about that. They're a lot more. Their value is much higher than ours per pound or ton of nickel. If you take that approach, we've got some analysts' work that's been done previously that's available on our website from the broking firms that cover us with Euros Hartley's, Argonaut and Foster Stockbroking. Some of those analyst reports do that comparison. So I'll let viewers access those analyst reports and download them. But they are more valuable per pound, and they are more valuable because they're more advanced. So, you know, they're closer to that first ton of nickel delivering revenue into their coffers as Nickel West has now started up the concentrator. When we drive past the concentrator now, we can see all Mincor's ore on the pad waiting to be processed, and we can see the mills turning. So it's exciting times, and the best way for us to push our valuation more towards Mincor's valuation is, as I said, is to emulate their pathway, and we're busy trying to do that.
And lastly, how are you viewing Lunnon's gold exploration opportunity? Is there some drilling activity planned for gold prospects?
So the most recent drill hole that we drilled that had gold potential was the Kenilworth hole that we drilled with the government, with the subsidy from the exploration incentive scheme. We announced that we finished that hole. It didn't reach the nickel target. The geology was extremely different to what we were expecting at that depth. It was the very first hole that had been drilled in that package at that depth. So that has some potential for gold, but we're not sure. We're busy sampling and logging that. We have to give the government a report, I think in August, to summarise all the assaying. We need to do downhole EM. We haven't explained the EM target that was the basis for that drill hole. We didn't hit the nickel target, but we don't think that was the source of the EM target. Other than that, at the moment, we haven't really done any gold focused exploration since the very first RC holes we did when we came out of the IPO in an area called Lunnon basalt footwall. And the reason for that is because we've been so successful at Baker and Warren. So we're very much a nickel focused explorer. We obviously have the gold rights at Foster Jan, other than two big areas or two quadrants that are excluded, where Goldfields retain the gold rights. So it's not a big focus. No, it's pretty well 100% head down on nickel at the moment, Chloe.
Perfect. Well, that's all we have time for today. Ed, thank you for joining me today. Congratulations on a tremendous year since IPO. And thank you also to all of the attendees and for the audience questions today.
Thanks, Chloe. Thanks for organising everything.